guys, welcome to the channel. If you are new to the channel, smash the like button. Like, if you don't like, don't dislike it.
I got
All right, so let's talk about synthetics. Like, this is one topic that most people have requested I talk about. So like, I actually used to trade more synthetics than forex, but recently, because of like a lot of funded account trading and all that, like I've been much focused on trading forex because of the funded accounts I trade and all that. So synthetics, what is synthetic? So synthetic means it's not real, right? And synthetics is a product of deriv.com. So they created their product of the derivative. So like something that mimics the similar environment of how the forex market works. So they created their version of trading, which is something that is not real, but functions similar to the way the forex market works. So most people refer it to as synthetics volatility. And you might have probably heard of volatility 75. It is like one of the most common volatility instruments or synthetic instruments that it's out there, right? And today we're going to talk about synthetics. So I might introduce you to the synthetics and some reasons why you should consider trading the synthetic indices and basically the ins and outs of synthetic indices. So let's get right into it. So synthetics are products of deriv.com, previously known as binary.com. So they brought these instruments. And how does synthetics work? So it is synthetic, but it is the randoms are not. So most people say, okay, the charts are manipulated, but how it works is they use algos that generate random numbers. So the numbers are random numbers, and even deriv themselves don't know what number is going to be next. So whether the market is going to go up or down from a specific level, even deriv themselves don't know, because it's a random number generator that generates the numbers. So it is synthetic, but it is automated in such a way that it cannot be manipulated. And it is only a product of deriv.com. So you can only trade them with deriv.com. So people that ask me, okay, what broker or which brokers can I trade synthetics on? The only broker that you can trade synthetics on is deriv.com, because it's their exclusive product. They created that product. So the only broker is deriv.com. And what instrument can you trade on deriv? There are so many instruments, and they've classified it into so many classes. So we have step index, the volatility indexes, we have the jump indexes, and we also have recently we have the currency basket, USD basket, AUD basket, and then a GBP basket. And we also have the boom and the crash. So the boom and the crash is also something that is very common, and most of you might have heard of that too, right? So I will take you through where you can get the instruments and all that, and I'll also explain how the various instruments, the differences between the various instruments, and also tell you about the advantages and disadvantages of trading these volatility indexes. All right, so which one should I talk about first? So let me go and share my screen now. I'm sharing my screen now. How is this trade going? So they just released AUD news, and I'm trying to scalp this down. Yeah, this is how do you call it? This is a new challenge account I bought today, my forex funds account. So this is deriv.com. So they have their own website. So if you want to trade it, you don't use the same website that we use to trade forex. You go to trading. So you can do a Google search, go to binary trading view, binary.trading view, right? And then mostly the first one that comes, trading view implementation for binary.com here. So you go to trading view implementation for binary.com and you open this page. So here, mostly when you open it, this is how the interface looks like. So you have the same features here. So this side here, you have the tools here, you have the instrument here, time frame here, your candle type, so you can switch between bars, hello candles, Elkinashi line area baseline. You can also compare charts here, and then indicators, right? So what you do is if you remove what you have there, you have this interface. So you can analyze your forex pairs here. If you put it to forex, you have stock indexes, stock indices, you have commodities, synthetic indices. So these are the ones that we are looking for. So these are the synthetic indices. So we have the volatility indexes. So volatility 10x, volatility 10, volatility 25s, volatility 25, volatility 51x, volatility 50, volatility 75 1x, volatility 75, volatility 100 1x. These are all volatility indexes. And then we have bear market index and bull market index. I've actually not traded these instruments. Let me show you. This is how they look. It's something that I've not really traded. Like, it's kind of a different concept I've not really looked at. So I'll be sharing a lot of videos on this, but I won't, unfortunately, I won't be able to give you any information about the bull market and the bear market index because it's not something I've traded myself. I've traded it like 1 or 2 times, I think, but I don't really know how it works and I won't be able to help you, unfortunately. We have the boom indexes, boom and crash. We have boom 300, 500, and 1,000. Same for crash, 300, 500, and 1,000. We have the step index, and then we have jump 10, 25, 50, 75, and 100. So I'll do a separate video where I'll explain to you the various instruments, the lot size requirements, and what you should trade with, different account sizes, and all those kind of stuff. So like, if you just chance on this video, subscribe and keep your notification button on, and you get all the new videos when they get uploaded, right? So these are the volatility instruments. And now let's talk about why you should consider trading volatility instruments. First of all, it is strictly based on technical analysis. There is no fundamental analysis, except recently they've now added bull and bear. How do you call it? The basket. You don't see those ones here. Okay, basket index. Sorry. So we have AUD basket, Euro basket, GBP basket, USD basket, and gold basket. So you can trade this on the river. So these ones mimic the forex market. So if you're trading gold basket, it means if gold is strong, gold basket is going to push up. If USD is strong, USD basket is going to push up. GBP basket is going to push up if GBP is strong. So those ones will be affected by news. So that is the recent changes. But if you're trading any of these ones are not affected by news. These ones are not affected by news. So you can trade them, do your technical analysis, and then trade them without any news. So if you are someone that have been complaining about, oh, I entered this trade and I was spiked out because of the news, and you don't understand the fundamentals and you don't want to go through the pain of understanding the fundamentals, then you need to consider trading synthetics. Another reason is the instruments are very tight spreads. So like you see forex, if you're trading 0.01, like your spreads are like, even on Euro USD, most brokers are giving you like 3 pips spread. The best I've seen is 0.8. But there are some of these instruments, not even some of them, most of them, you literally have no spreads at all. The spreads are like really tight that you can even trade a very big position on a $10 account. Like you can trade good position size on a $10 account and it can go instantly in profit if you get a good entry. So it is very good for, in terms of spreads, they have really good spreads. So another reason is that it is something that you can easily trade with a small account. So for I've always been saying that if I have a 500, just 500 USD to trade, I won't be trading forex. I'll be trading derivative, because when you're trading, it's all about we are buying and selling, right? If you have more money, you can buy more and you could potentially make more money. If I have 500 USD, I can buy more assets, right? That is the volatility synthetic indices. I can buy more things with my 500 USD than buy more things with forex. I could easily blow my $500 account if I go aggressive on certain forex instruments. Here to the same thing, they are very crazy instruments that you shouldn't play with. But if you are trading normally, you are most likely going to have like more value for your $500 than on forex. I'm not saying like one is better or not, but in terms of leverage and position sizing and all that, if you have a smaller account, you are better off trading synthetics, right? And another reason why you should consider trading synthetics is available on the weekend. So you can trade it on Monday all the way through another Monday. So this market has not ceased, because it's not like the Forex market where we have the banks closing and then a market closing on Friday. You get, so this market is always open. So if you're someone that wants to consider trading and because of your work you're unable to trade within the weekdays, you could look into trading synthetics. You could look into trading synthetics. So these are the major advantages. There are other minor advantages which I might cover in other videos when I'm talking about the various specific instruments. But these are the major advantages. Another side of this is the disadvantages of trading this. So if you're a fundamental trader, this will not be for you, because you'll be strictly be basing on your trades on technical analysis, and it will not really be of good help to you. Or if you have a strategy that is based on fundamentals, or you use the fundamentals to help you know when euro dollar is going to push up or down, and you add your technicals to it, this will not be good for you, right? Another reason is because this is just one broker. There are some countries that restrict that does not allow derivative to operate. It means you have no alternative. If you can't have a derivative account in your country, it means you cannot trade synthetics, which is a very big limitation, right? Those are the major disadvantages that I can think of. And again, because it's just derivative tells us that, okay, the numbers are auto-generated. We are trusting, and okay, they are regulated. So yes, so we are agreeing to that fact. They are regulated and the numbers are auto-generated. But again, there is no second broker that is also providing the same thing, that if something fishy happens in the market, we can say, oh, this broker did not do. For instance, if you're trading Forex and just sometimes when there is a news event, one broker spikes down more pips than happening on other brokers, you know that, okay, this broker is a very bad broker, right? But if you can't have that. So that is also one disadvantage with that. So they have that monopoly, right? So that is the other side of it. So apart from that, I think considering trading synthetics is very good, and there are so many instruments that you can choose from, and depending on how you trade, you could take advantage of the very slow moving instruments and then maximize profit on them. And if you're a very aggressive trader, you have like very bad boys here that you can take advantage of, like the volatility 75, the 25 1x, the 51x, and all that. You can take advantage of them. Right. So this is a brief introduction to trading synthetics, and synthetics is really broad, like, you know, not as broad as that. Like, there are so many different things that might be going in your mind. So leave a comment below the video, and then let me know what kind of questions, especially those that are very new to trading synthetics. Let me know what kind of questions you have, and then I'll address those questions. If I have multiple people asking similar thing, then I might consider making a video and explaining and addressing those issues. Right. So leave a comment. If you're already trading synthetics, leave a comment. Let me know which one is your favorite, which of the instruments is your favorite, and let's move from there. All right. So if you like the video, if you enjoy the video, click the like button. If you are a returning subscriber, thank you, and like the video, and don't dislike it if you don't like it. And if you're a new subscriber, welcome, and hope you enjoy your time with me. All right, so peace out.